So markets come to terms with the prospect that rates will be higher for longer, that maybe inflation could be stickier for longer. Guy.
Today, yes, absolutely. I'm surprised. Again, if you had told me what would have happened, it would have been S&P's down 100 handles, easy given a run. You know, Karen, I think it was last week, Thursday, maybe said she was short the TLT. She basically top-ticked it. It's gone down ever since. And if you look at that trend line that we talked about in the TLT, since September, that downtrend is intact, meaning I think yields continue to go higher. What does that mean? Well, I don't think it's particularly favorable for markets. Again, I'm surprised the market behaved as it did, but it's just a matter of time before rates become a huge headwind.
So, well, I've been short the TLT for a while, covered some back and forth, but I generally think, and I am still very much positioned for the CPI, continues to be hot. I do think, to bring back a word that is, a terrible word, potentially transitory items in there, when you take out some of the effects, and we don't know exactly what they're going to be, California fires, for example, maybe it'll be a little less hot going forward. But I do think that this administration has unleashed animal spirits, and the combination of excitement about that and regulatory changes is sort of pro-growth, which is good, but also, I think, inflationary. Even though they hope to not have it be inflationary, I think it will be.
Yeah, there were a number of items that saw their biggest increases ever on a monthly basis, which were prescription drugs, medicinal drugs, parking, recreation, audio and video services. Then you had eggs. That was the biggest jump in a decade. I mean, these things hurt.
I feel like I've bought all of those things this month.
Everybody has. Who hasn't?
Yes. But, eggs are eggs. You had the bird flu, right? So you had the killing of 30 million birds.
Okay, so that's a one-off. Then there's also seasonality, because people tend to raise prices at the beginning of the year in January, so there might be some of that going on.
Yeah.
But still.
Yeah, there's a bunch of stuff. But look at it this way. Worst case scenario, inflation spikes, we go into a recession. What happens? He cuts rates. So do you think we're going back to a Fed put back in play? When you announced on the show, is the market just letting it roll off its back? Could that be the reason why the market is letting it roll off its back? That eventually, if things are the worst case scenario, then he cuts rates.
So you're saying win-win situation?
I think it's a win.
Inflation hot, Fed cuts, win.
Deregulatory environment.
Cut, win.
Yeah, so deregulation, lower taxes, pro-growth policies. I think Karen hit on a bunch of stuff. Could we overheat? I don't think we're going to overheat. I think we'll probably have a little bit of a spike and then maybe pull back.
What do you see for rates?
Yeah, I mean, as a pattern, right? It's what a pair of twos is. It's not
I knew you were going to say
You knew I was going to say because that's what it is.
Yeah, right? Tell, and now you know what it is.
What was that tell? But the point is that we're looking for inflection points. We all are, whether we're looking for inflections on the income statement as a fundamental analyst or on the balance sheet. Wow, the debt's being paid off, or in the price action of the chart. And it just doesn't feel as though this is a great inflection point. We're about to really go higher or go lower. It turns out that the cost of 10-year money has been at 4.5 for 1 year and 4.5 for 2 years. We're getting into almost 3 years this where it's Goldilocks, and so it doesn't go to 5 and 6 and 7, and it keeps not dropping down to 3. Here we sit.
No, it's fair.
I mean, good for equities.
No, and it has been.
Yeah.
I mean, the S&P is within 0.5% of an all-time high. So clearly, the equity market cares about none of this. But it's interesting. Inflation's a problem. I mean, they were throwing around transitory 3 years ago. They were dead. They couldn't have been more wrong, and it's still sticking around. And it's only, I think, going to get worse on the back of all the things that Karen's talking about, which means almost by definition, rates have to go higher. Now, the Fed can do whatever they want in the short end of the curve. Have at it, as Dan would say. They don't control anything else, and they're learning the hard way that they don't. And, you may want 10-year yields to go lower. You may want mortgage rates to go lower. They're not. And if they do, it's for the wrong reasons.
And